Retail market, Q1 of 2026. Portland's retail market ended the first quarter of 2026 with a fading momentum as economic uncertainty slowed new demand. This softening is defined by a sharp geographic divide. Exurban and establishing suburban areas like Tigard, North Beaverton, and Lake Oswego/West Lynn are maintaining tight availability due to a strong population growth and steady foot traffic. In contrast, the Central Business District remains in a fragile recovery state, where the persistent safety concerns and diminished foot traffic have pushed vacancy rates to more than double the metro average. Stagnant population growth has led to cautious sales forecasts and dampened retail rents, shifting a 2.6% historical average to a negative 0.1% over the past year. Stagnation in labor markets, combined with the slow recovery of the CBD, has caused operator hesitancy in the region, keeping vacancy rates on an upward trend for the near future. Overall, the past 12 months, net absorption has plummeted to negative 470,000 square feet, a stark contrast to the decade average of 240,000 square feet. This decline stems from an uptick in move-outs, reaching 3 million square feet this year compared to the pre-2020 average of 2.7 million square feet. Much of this weakness is concentrated in the power center subcategory, where the ripple effects of bankruptcies, most notably from tenants like Joann, continue to drive recent vacancies. There was 39,000 square feet of new product delivered to the marketplace in the first quarter of 2026. While 731,000 square feet still remains under construction. In the last 12 months, 229,000 total square feet have been added to the Portland market. There are a few larger projects set for completion in the second quarter of 2026. A 120,000 square foot retail center on Pioneer Street in Ridgefield, Washington is set for completion in June. Set for delivery in May is the Kinline Apartments, a mixed-use project in Beaverton, which will add 89,000 square feet of ground floor retail space when completed. Portland's rental market continues to trail its West Coast peers, dampened by high availability and a sluggish downtown recovery that hampers retailers' recent capacity. As major local employers like Intel and Nike implement job cuts, the region faces mounting economic pressure, compounded by a population recovery that still lags behind pre-pandemic levels. Consequently, lease negotiations are increasingly dominated by tenant concerns over dwindling customer traffic and weakened consumer spending. For detailed information regarding this report and discuss how Norris Stevens can assist you with your real estate needs, visit our website at norris-stevens.com.